Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Bitcoin is booming right now. We've seen records set in Aussie dollars trading at around 105,000 Aussie dollars a unit. In US dollars, it's around that 65,000 US dollars a unit level. The reason the token has run so hard is the huge inflows from investors into exchange-traded funds offering Bitcoin and other digital tokens. Add in a weaker Aussie dollar and you get a new record. But how long can it keep going, and what's ahead for cryptocurrencies this year in terms of regulation? That's the big question. Remember, this is general information only, and you should seek professional advice before making investment decisions. John O'Loughlin is the Managing Director, APAC at Coinbase, the largest cryptocurrency exchange in the US. John, welcome back to Fear and Greed.
Hey, thanks, Sean. Great to be back.
When we spoke late last year, we were talking about the potential for spot Bitcoin ETFs from major funds like BlackRock to push Bitcoin right up. Well, they came to pass in early January this year when they were allowed by the regulators in the US. Are you surprised at how much of a push Bitcoin has got from these ETFs?
No, don't think we're surprised, probably because we were involved in the process from its outset. And some of these have been in the works for the better part of 5 years. So, working with the likes of BlackRock and other names in this industry, we are humbled to be the custodian to most of these ETFs. And there are similarly discussions going on in other geographies around custodying ETFs in a number of regions, including the ASX. And so when you look at the, broader journey of the ETF phenomena versus other products that are out there, clearly these have been adopted very positively. And then, even looking at ETF demand versus supply for Bitcoin, I think we're kind of somewhere around the 5,000 Bitcoin level in terms of demand versus the 900 of Bitcoin kind of supply on a daily basis. And so if you think about what that does with a halving, then that 900 gets halved to 450 again. So we think it's sustainable, and it's a great entry point for so many people who possibly haven't been comfortable being exposed to the space before. And on top of that, Australians are also, becoming more and more familiar with ETFs as a product, and they're becoming more easy for everyday Australians to access.
Okay, there's kind of a few things in that. So these ETFs are allowed in the US. You said you're sort of involved in discussions in other jurisdictions. So is it likely to pass that ETFs, which include Bitcoin at least, potentially other cryptos, could end up being listed on the ASX or the UK? I'm not tying you down to any particular exchange here, but, exchanges outside Wall Street.
No, certainly. I mean, there's lots of, regulated bodies who are already in this space. And there have been some previously in Australia with BetterShares and others briefly. Yeah, they didn't have a huge amount of liquidity, and it was possibly a little bit early days. But I think what's happening in the US is clearly driving those activities in other exchanges and other geographies. So, we are heavily regulated as the only publicly listed international exchange out there. So we very much like to dot our I's and cross our T's. And we'll be, kind of looking very closely at what entities or what bodies are doing this and whether or not they feel that they are properly regulated by an AFSL or what other means they feel is appropriate. Clearly we want more regulation in this market in Australia, and that will allow for more certainty in this space. And I think those types of products to be accelerated.
Okay. We are talking about Bitcoin in terms of the US ETFs. Are other cryptocurrencies part of ETFs? And if not, will they eventually be part of ETFs, do you think?
Yes, I think Ethereum is really the next kind of one off the block. And there have been filings around ETH ETFs as well. And I think that's also driven some of the popularity or the movement in terms of the price of ETH. Clearly the second most held kind of asset. And I think people are seeing a real utility for Ethereum. It's quite a different token to Bitcoin, but that's already in play, and that's quite a logical one. And I think for, laymen on the street, they're beginning to kind of understand, okay, what does Ethereum look like in terms of an ETF? So I think that's clearly the next milestone for the industry beyond the technical ramifications of the halving in a few months.
Okay. So, the halving will make a big difference. Just explain what's happening there, and then kind of the longer term outlook for Bitcoin and other cryptos. But Bitcoin is kind of the one we're interested in here because of the ETF issue just right now today.
Yes, certainly. So I'll talk more to the Bitcoin halving as opposed to how it affects Bitcoin price, because I don't think it's probably appropriate for an exchange to be giving guidance on price. But embedded in the code of Bitcoin is an allotment for a total maximum supply of 21 million Bitcoin. And so you have this fixed supply together with a decreasing number of block rewards for the miners. And so every 4 years, you have this periodic decrease in this rate of issuance into circulation. And this is called the halving. There was in 2012, the reward was 25 Bitcoins per block. In 2016, it decreased to 12 Bitcoins per block. And at March 2023, miners are awarded 6.25 Bitcoins per block mined. So you have this halving, and it relates to roughly every 4 years, depending on how quickly blocks are mined, which averages about 10 minutes currently. To go much beyond there, you need to really be getting into, application specific integrated circuits and computers designed to hash compute as quickly as possible. So a little bit like Moore's law, in that we're trying to kind of, keep the supply limited. And that's really the fundamental attraction of Bitcoin.
Stay with me, John. We'll be back in a minute. I'm speaking to John O'Loughlin, Managing Director, APAC at Coinbase. Okay, John, so the bottom line there is that there is a finite amount of Bitcoin in the market and therefore it has this scarcity value. What about regulation? You mentioned it before and you're happy for regulation to be increased. What are you talking about? What do we need?
Great point. And I think as this listed entity, we are really keen to engage with Canberra on this. And we've had a good audience with people like Treasury, the Reserve Bank, ASIC, and others. If you look to somewhere like the EU, they've managed to kind of land on this crypto assets regulation regime called MiCA, which represents a very kind of unified approach to crypto across all the EU markets. So when you put this regulatory guardrails in place, all of the separate EU countries, which we could say compare to like the states of Australia, can go ahead and start building their own crypto regulation. And then companies and investors and consumers are comfortable kind of using it. And so right now in Europe and MiCA, we're seeing some reviews of how crypto is marketed to retail consumers. And should there be some cooling off periods or limitations around that, et cetera. And so every exchange is working around those parameters because it's kind of clear of what's happening. We're in a little bit of an in-between period in Australia in that there has been a second round to what we call the token mapping exercise, which has been led by Treasury. And Australian institutions and the kind of technocrats really don't want, invasive regulation that's going to mean we have to upend all existing securities law. But clearly, this is a new asset class that Treasury and the RBA and ASIC have not necessarily had to deal with before. So it's not clear to us that we can necessarily use the same lexicon that's been provided historically for securities. So we would like some clarity on that. And I think in coming months, the latest round of the token mapping consultation that we made a couple of months ago, we'll get an audience in Canberra. That is due to be made public, or at least our submission, is available if people look into the various filings in Canberra. And we really want a best-in-class global regime that lends itself to what decentralized finance is. So, for example, there have been calls to have local custody in Australia. We're not supportive of local custody because we believe that we have very sound, secure custody globally right now in the technology that we use. And it's actually a stronger technological solution to have custody spread globally in a decentralized fashion. So all in all, moving to an AFSL type regime that should drive some consolidation in the industry, just because maintaining an AFSL and the governance standards that people will be held to account on by ASIC around that regime are quite a step up from the current requirements, which are driven by AUSTRAC, which everyone has been registered with to date in this space.
Okay, one final question. Financial planners are all important to many people making investment decisions. Are they on board with Bitcoin and cryptocurrencies and using exchanges like your own, or is there still an education piece for them?
Look, I think they're moving pretty rapidly to it. I think we see a lot of inquiries from self-managed super funds. if you kind of think about the biggest pool of financial planner demographic out there. And we hear time and time again from family offices and self-managed super fund administrators and self-managed super fund trustees that they want to follow this, let's say, broad rule of 50 basis points or 1% of their asset allocation into digital.
Yep.
And we're seeing that across the market. So I don't think it's a matter of if or when, it's actually happening now. And we have solutions that we're looking at for that space. And clearly that's a really advanced investor set in Australia. They're listening to their children, their grandchildren, and there's clearly a very strong demand for this demographically from this kind of, interestingly, under 35-year-old group, but also that's really influencing what I would say would be a plus 65 boomer set as well.
John, thank you for talking to Fear and Greed.
Thanks, guys.
That was John O'Loughlin, Managing Director, APAC at Coinbase. This is the Fear and Greed business interview. Remember, this is general information only and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.